Today I'm going to be buying 2 brand new dividend stocks to add to my portfolio. If you've watched any of these videos before, you'll know the drill by now. Every single month or every time I invest, I do it with full transparency and I bring you guys along with me and show you exactly what I'm buying and how much of it for my own portfolio. So first I will share which stocks I'm buying and I'll share why I'm buying those stocks, and then we'll physically go over to my platform and actually buy those stocks. I've seen a lot of people guess this first one. I've mentioned it in a previous video as one that I may be interested in buying very soon. And those of you who picked up on that, you're absolutely right. Today, I'm going to be purchasing some Airtel Africa stock. Airtel Africa is quite a new stock. It only actually joined the FTSE 100 in January 2022, but it's the second largest telecommunications operator in Africa. So it's based in the UK, but it operates in 14 different African countries. And it's growing extremely fast at the moment. When I was recently delving deep into my portfolio, I actually did a live stream on this. I looked at its diversification, and one thing that I noticed is I was missing a few things, but one main thing was I didn't have any exposure to the communications sector. And my initial instinct was to maybe pick up some Vodafone, but I don't know. I just didn't really feel like I wanted to add that stock to my portfolio. So I was doing more research, and that's when I came across Airtel Africa. And I'm really excited that today I'm actually going to be filling that gap in my own portfolio and making it even more diversified in terms of sectors. So Airtel Africa, for those of you who don't know, they pay dividends twice a year. And the current dividend yield comes in about 3.6%. Now, I wouldn't say that this company fits into my general portfolio that well in terms of it's not really a dividend growth stock. And there is just a lack of data on this company because of how new they are. You can see that on Dividend Max, we only have 2 years of dividends here, and we can see that it's decreased because of the whole 2020-2021 scenario. So you could say that this is going to be quite a risky purchase for me, and I do agree, but I think there's lots of growth potential here. And I've got to take some risks. Like people always say in my comments, you're only 26, you're investing in these really stable companies, but maybe add some risk to your portfolio as well. And I do feel like this stock is going to do just that. Just taking a look here at how they've been performing. So over the last 1 month, they're down by 5.88%, 6 months down by 18.25%, year to date down by 22.42%. And then if we look at 5 years, this is when we start seeing a bit of a different picture. So over the last 5 years, they've done really well and they're up by 61.45%. And if we max it out, we're getting the same picture because like I said, they're fairly new to this whole thing. And again, 61.45%. I did go into more details on this stock on a previous video, so I'll try and link that if I remember. One thing about this stock that I really like is they're seeing such fast growth. They're increasing their numbers of their customers so rapidly. And although there are some factors that I'll get onto in a minute which may put you off this stock a little bit, I think when I weigh everything up and knowing that I want to fill this gap in my portfolio in terms of diversification, I really think this is going to be a good fit. One thing that I like with this stock is that they're operating in Africa. And I feel like that's a market for this stock to do really well in. And there's going to be loads of growth expansion potentials over there. This company is seeing a lot of cash generation at the moment. And their mobile money transactions are up by like 32%. And this is because a lot of people in Africa don't have access to banks, so Airtel Africa are filling that void for those customers. Now, I'm not a financial advisor, but I will give you some points that I found that may be something that you want to look at when it comes to this stock, and that is that they do have a little bit of debt. They have some quite high competition in the market, and also the last point is that some political stability in the countries that they operate could of course affect the stock performance. So just some things to think about, and obviously always weigh up your own risks before deciding what to invest in. With all that said, we now get to do the fun part of this video, which is actually buying some of this stock. So you'll see that I have £521.94 to play around with here, and I'm buying this stock, and I'm also going to invest in something else later on in the video. So let's just get on with it. So we're trading, the ticker symbol is AAF. Make sure it's the one on the London Stock Exchange. I want the stock option. And I've written down the amount of shares that I actually want to buy. So I want 170 shares. Now, I'm going to do a market order because I know what price I want to pay. But I do feel like I should probably look into limit orders a little bit more so I get some better deals perhaps. Definitely something that I could capitalize on a little bit more than I currently do. So 170 shares of Airtel Africa. I'm going to preview this and just make sure this all checks out. 170 shares. Commission is going to be between £1 and £1.17. I'm on this plan, so it's always roughly very similar, no matter how many I buy. Total is going to be £170.91. And this is going to be my first time actually investing into this position. So post-trade position is 170 because that's how many I'm buying today. Just like to give it one quick once over in case I've pressed the wrong button. Looks good. Okay, let's transmit that order. So excited. Order falls out of regular trading hours. That's fine. It's currently Saturday, so this will go through on Monday. So we'll press OK to that. And the order has been submitted. So that's really exciting. Okay, let's go out of that. And now what you'll see is I have this little red dot over trade. That is just some information that I've placed this order and it will go through on Monday when the markets reopen. Okay, so the next one that I'm going to buy today is not actually an individual stock. It's an ETF and I'm super excited to be adding this one to my portfolio. Honestly, it's been one that I've been thinking about for a good probably 2 or 3 months, and with the pound being so weak, I've just held off a little bit and the stock price was quite high. It just didn't seem right to buy it when I was looking, like I said, 2 to 3 months ago. But I feel like I'm just going to bite the bullet and buy it today. The pound's a little bit stronger than it was. And yeah, I'm so eager to get this one into my portfolio. If you haven't guessed already by the fact that I'm adding an ETF and I'm interested in dividends, it's going to be the FTSE, the Vanguard FTSE All World High Dividend Yield ETF. And that has the ticker symbol VHYL. I'm just going to go on to Vanguard's page about this ETF to explain why I'm buying it because it's super helpful. So obviously this is an ETF, which means you get lots of exposure to lots of different stocks. In fact, 1,804 different stocks. And just given the name of this, we can see all world. So I'm going to be getting stocks from all across the globe. I'm not going to be just getting US stocks, not just UK stocks, not just European stocks. I'm going to get everything and some exposure to emerging markets as well. And then we've got this bit here, high dividend yield. This just means that this ETF focuses on those dividend stocks that pay above average in terms of their dividend yield. Now, I always bang on this channel about how picking stocks just based on the fact that they pay a high yield is quite a bad strategy in my opinion because it exposes you to a lot of risk. This isn't really that. This isn't just those companies that are paying above 10%. It's just above average. One of the main reasons as to why I'm particularly excited to get this ETF is because I believe that it's going to bring my portfolio a lot of diversification. We'll go through exactly what it invests in a minute, but right now you'll know that I have the S&P 500 ETF VHYL in my portfolio, and then I have a collection of UK individual dividend paying stocks. So I am somewhat diversified already in terms of I have exposure to some very limited amount of UK dividend companies. And then of course I have exposure to the US market, which is a dividend paying ETF. VHYL pays me a dividend, but they're not focused on dividend companies necessarily. And if you're an OG on this channel, you'll also know that I have a Vanguard account that has 2 other ETFs, but that account isn't really focused on dividends as such. So this is going to be a way for me to be able to get myself exposure to a lot of other dividend stocks, and not just UK ones, which you'll see in a minute. You might be thinking, well, you already have VUSA and there's going to be a lot of crossover, so why are you buying this? And we'll also cover that as well. So just looking here, the region exposure, it's 49.5% in North America, which we would expect, but still, that is a lot lower than the S&P 500. Actually, I've got VUSA up here so we can compare this. This might be quite interesting. So North America, obviously 100% because it's the S&P 500, getting a lot less of that. Then we get 24% exposure to Europe, 15% in the Pacific, 11.2 in emerging markets, which I'm super excited about. That will definitely add more to my portfolio, more exposure globally. And then we've got this Middle East and other section. So to me, that is a pretty good exposure. If we go down here, we can see the market allocation. We've got United States, we've got Japan, UK, Switzerland, Australia, Canada. You can see here we're really getting exposure to a lot of different areas. Go back to VUSA and we can see again it's all in the US. And I love VUSA. I'm a big fan. I'm just saying why I'm getting the VHYL. Oh God, all these ticker symbols. I can't keep up. And then if we scroll down a little bit more, we can see what sectors we're getting exposure to. Now this to me is really interesting because what you'll notice in the S&P is a lot of the S&P 500 is focused on the growth sector, growth stocks, sorry. So you're getting a lot of the tech sector. You can see here, information technology. And that's great, but you know, you could argue that you don't want just exposure to those companies and you want some more of the stable companies that are able to generate dividends to their investors. Well, you would argue that maybe if you're only interested in dividends. Anyway, this new addition to my portfolio is going to give me quite a high exposure into the financial sector, which is interesting because, as you know, right now, I lack that. I only have HSBC in my portfolio and it's such a small percentage. I also do have legal and general, but, you know. Then I'm going to get healthcare in quite a large percentage, consumer staples, and all these other ones. So what I'm seeing here is that the S&P 500 is more geared towards maybe the market being in its growth stage, and the all-world high dividend ETF that I'm going to be buying, VHYL, I have to keep reminding myself of that one, is going to be a little bit more stable, hopefully, and be able to ride the waves of different market situations. That's my hope anyway. Now, this is where it gets really interesting. So we can see how much crossover there really is and whether I'm going to be duplicating stocks by having these two stocks in my portfolio, sorry. So when we look at VHYL, we can see that we've got these, I'm not going to read these all out, but we can see that we've got these stocks here. Now, a lot of these are the big American dividend paying stocks. I watch a lot of US dividend channels, and these are ones that those guys invest in. And I'm always really jealous because I always think that if I was a US investor, I would definitely put a lot of money into these dividend payers. But of course, when you're based in the UK, that's a little bit more difficult and maybe not as efficient money-wise. You can obviously do it. But this ETF is going to give me exposure to those big names. And I'm super excited about that. But we can also see that we have like Nestle here. That is, of course, a European stock. It's not a US stock. And that is in the top 10 companies that I'm being exposed to, which is really, really cool. If we look at VUSA, in VUSA, I'm obviously getting those big growth tech companies. I'm getting Apple, Microsoft, Amazon. I'm getting Tesla, all of these fantastic companies. And only here do you start getting Johnson & Johnson, which you see is the, first place here. So my argument is going to be that they're not too overlapping. There is definitely overlap, 100%, but I do feel like there's definitely a place for VHYL in my own portfolio. I'm actually considering making a whole video on why I'm buying VHYL, so let me know if you're interested in that. I made a video on this ETF a few months ago and it did super well, the video, and I really enjoyed it. And that was one of the main pieces of research that I did into this, where I thought, actually, I think I want my hands on this. So yeah, let me know if you want that video. Anyway, it's a quarterly dividend payer, so it's going to pay me 4 times a year, which is going to be very nice. And it says on Dividend Max that its dividend yield is 4.2%. If we go back to Vanguard's website, which is probably a little bit more accurate given that it's a Vanguard fund, the yield says 3.8%. So still, I'm getting about 4%, which is quite nice. And of course, we can look at the annual dividends and how they've managed to increase quite a lot apart from the dip in 2020. And then we'll just take a look at how the stock has been performing. Now, if you compare this stock to VWRL, you'll see that VWRL has outperformed this stock generally. But if you look at it in recent times, you'll see that this one, VHYL, has done a little bit better. And I think that's because of the instability in some of the growth stocks in the tech sector, and VHYL concentrating more on them stable dividend payers. And it just depends what you believe the market's going to do over the next few years and the next few decades, really. But if we have a look at it, 1 month down by 3.35%. Over the last 6 months, it's actually up by 4%. Year to date, it's down by nearly 2%. 1 year, not even down by a percentage. 5 years, it's up by 9.4%. And if we max it out here, we can see up by 46% basically. And it looks like it started trading in 2013. So still fairly new, actually. Not as old as some of these other ETFs that you can get your hands on. Okay, so let's actually buy some of this ETF. This has been a long time coming for me. So VHYL, London Stock Exchange one. Yeah, perfect. And I've written down that I want to buy 6 shares of this. So let me just make sure that makes sense money-wise. Preview, £284.66. So I'll have some money left over. I don't think I can buy 7 shares. No, I won't be able to unless I put more money onto the account. That's fine. We'll get 6 shares today and we'll probably end up topping this one up in the future as well. So commission on this is going to be £1.16. And I won't show you this, but if I put 8 shares, 10 shares, commission's going to be the same. So, you know, you want to buy as many as you can if you're on the same fee plan as me. But there's only so much VHYL that I can afford today. So let's leave it there. It's going to cost me £284.66. Just give it a check and transmit. So exciting. Let me know what you guys have been buying recently. And of course, feel free to leave your own opinions on the 2 that I've picked up today. Thank you so much for watching this video, and I'll see you very shortly in the next one.